Look at this trend. How do you know when to fade this move, when to take profit if you're long, when to short if you want to short? How do you know when this trend is about to finish? Certainly not when the RSI is overbought. Actually, if you look at this, when the RSI gets overbought, the trend actually continues. And definitely not when it hits resistance, because actually when it hits resistance, it goes up. And I would guess it's going to go up here, but we'll get to this in a second. You know that this trend is actually going to fade when the story that is driving this trend actually fades away. When the reason that got you into this trade isn't there anymore. So you don't exit a trend when the price is high. And definitely you don't fade a trend just because the price is high. You start thinking about it only when the fundamental reason for which the trend exists is no longer valid. So the question now becomes, why is gold trending higher? Okay, sit tight here because this gets wild. Point number one, a dovish Fed chair is coming up next year. You know that. If you follow us, you know that. But look at what Trump said 24 hours ago. He wants the new Fed chair to consult with him on what to do. Typically, that's not done anymore. It used to be done routinely. It should be done. It doesn't mean they actually have to do what they say, but certainly where I'm a smart person, they should be listened to. Now, if that wasn't enough, he also added that he thinks rates should be at 1% or lower. Hold on a second. First of all, why should gold care about this, and why gold cares about this actually? Well, basically, when the Fed goes dovish, rates drop, yields drop, and so the opportunity cost of holding an asset that pays zero dividend, like gold, goes down. So lower interest rates, lower yields make assets like gold more attractive. This is what is called an opportunity cost. Higher interest rates, bonds pay more, less interested in gold. Lower interest rates, bonds pay less, which means more interest in gold. This is the opportunity cost. This is how a portfolio manager thinks. If bonds pay 4%, why should I have, a 10% allocation in gold? For instance, if I can have that 10% paying 4% interest. But once bonds pay less, then the opportunity cost of holding an asset like gold shrinks and the asset gets more attractive. This is how a portfolio manager thinks when deciding how to allocate his funds. But I don't want to bore you with the technicalities now, because this point right here follows suits perfectly with reason number 2 for why gold is rocketing. A politicized Fed that is about to lose independence. Again, read what Trump said right here. We're heading into a period where the independence of the central bank is going to be, well, let's call it flexible, okay? If the Fed is under pressure to keep the economy juiced, for political reasons, maybe also because we're heading into a year with the midterm elections in the US, well, if he has control on the Fed, and he's gonna have control on the Fed, because now he's about to appoint the chair himself, so he should know who to appoint, well, at that point, the Fed becomes political. Now, you could argue it's already political. I don't care. What I care is that it's going to become even more political. They will downplay the inflation side and they let the economy run hot as possible. And history tells that when a central bank gets politicized, the currency gets debased. And when a currency gets debased, when trust in the currency gets reduced, gold is the perfect safe haven for that. And if that wasn't enough, we're not in a deflationary period where lower rates are actually great. No, inflation is still at 3%. It's actually bottoming at 3%, which is the most important reason behind this run on gold. Lower interest rates, when inflation is too high, lowers the real yield of the currency. So the yield on net of inflation. If the interest rate is 2% and inflation is 3%, then literally holding that currency means you lose 1% a year. Just to hold that currency, you lose the value of that currency in purchasing power. So what do? You buy hard assets and you buy protection, such as gold. But you also buy equities, anything that doesn't devalue like the currency does. Anything that offers you protection to the inflationary erosion of the purchasing power of the currency. This is 70% of the reason why gold is trending higher. It's not all of the reason. There's a lot of central bank buying here for geopolitical reasons, tariff risks, sanction, all of that, which started from early 2022. But the fifth reason, very importantly, is that the labor market is cracking. Now listen right here to what Powell said at the latest FOMC meeting.
A couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought.
That strengthens the case that the Fed will have to, in fact, continue to lower rates, even with inflation at 3%. If the labor market rolls over, the Fed has, by mandate, has the duty to support it. So now, I want you to look at this list. Dovish Fed, politicized Fed, push for 1% interest rates, sticky inflation, weak labor market. Ask yourself, have all of these things fully happened already? Now, sticky inflation, yes, okay. Weak labor market is starting to get weak, but is it complete? Has this story fully run its course? Has the Fed cut rates to 1% already? No. Has the political pressure on the Fed fully materialized already? No. Has the labor market collapsed already? No. It's just now starting to weaken. It's been only 3 months, well actually 4 to 5 months, but it's only now starting to really weaken. This is what I mean by the story, the sentiment behind the trend, the story to understand behind the trend. We now understand that gold is going higher because of all these reasons. There's more, but let's keep it simple to this for now. So the question becomes, is this going to continue? So if you're trying to fade gold, if you're trying to pick the top on gold, you're basically thinking that the Fed is not going to be dovish anymore, they will turn hawkish, that Trump is not going to call for lower interest rates anymore, so he will not want 1% rates anymore. Also that the labor market is going to strengthen. Now, the question I have to ask yourself is, does this sound likely to you? Is this the view that you want to have? I can tell you that the trend in gold is not over. The fundamental drivers, the actual engine underneath the hood is just warming up. And the way you do that, the way you know that, is just with a little bit of fundamental context. Ask yourself, what is the fundamental sentiment behind this trend? And is this story, the story that is pushing price up all the way to current market price, is this story likely to change anytime soon? The answer for me is no. But hey, if you think the Fed will turn hawkish, that Trump will demand higher interest rates instead of lower interest rates, that it will pick a hawkish Fed chair, then yes, your view should be to fade this. It should be to fade this. But just for the record, you know, if you follow us, you know we've been bullish all the way in this trend. And I can tell you that this story is most likely just going to get started. There's a long way still for gold to be higher. This story hasn't even fully started yet.